Hi, I'm Jason Conta, Associate Editor at Canadian Underwriter and co-host of our podcast series, What's on Deck. For this episode, I sat down with Randy Carroll from AI Insurance Organization to discuss a variety of hot topics in the P&C insurance industry. We explored talent retention, M&A, and different career paths within the industry. One of the things we wanted to sort of get into was talent retention. I'm sure you've seen a lot too with that, but I'm just sort of wondering, how is talent retention faring in the broker channel?
It has its challenges. As far as talent and hiring, it is probably number one or number two in regards to what you have to keep your eye on a day-to-day basis, and it's the pendulum that's swinging the most. There's lots of opportunity out there for those that are working in the industry, both from an administrative side, customer service side, and a sales side. Acquiring and keeping talent is probably one of the biggest challenges that we see, at least that I see from the seat that I sit in with the brokerages that I'm working with.
How do you go about then, sort of keeping people or attracting them even into the industry?
Yeah, it's a little different than what it used to be. You've got those producers out there that want to come and take a look at potentially working with a brokerage. You've got some that are far and few between that are coming across that they're looking for just a pure commission base. You've got some that that are coming knocking on your door or that you're reaching out to that are looking for commission, but they're also looking for that draw on a month-to-month basis for some stability. It's kind of all over the map in regards to, but the availability and the shift, it's vigorous. The dollar in regards to compensation levels has increased drastically over the past 3 years. And a lot of that, I think, is driven by a little bit around mergers and acquisitions, but I think a lot of it has also been driven around those that are in my age bracket deciding that they don't want to do this anymore. And there's a lot of more open availability. You've got some seasoned professionals that are deciding to retire. It's somewhat hard to replace that person with somebody that's junior. You might take 1.5 people to replace somebody that has been around in the industry for a number of years. So it's a moving target that you really have to keep an eye on a regular basis, for sure. So
yeah. Okay. Yeah. And then I guess if we get into sort of M&A, because you were mentioning that, what are you seeing really with that in the M&A space right now?
Well, I think the M&A space has really driven a lot of the producer shift. There's, when M&A over the past, 5 to 10 years has traditionally been owned by the larger insurers. There was a good segment of larger brokerages for sure. But even those brokerages, most of them, I would say, were backed by large insurers. But albeit, I don't think M&A is going to really change much. I think we've seen a softening on insurer to insurer. There might be some wiggle room for another big announcement, but I think that's fairly settled, at least for the short term. I don't think we're going to see any big news from an insurer side. Brokerages, we see an announcement on a monthly basis, a major announcement on a quarterly basis. That's not going to go away. It is really nice to see that, some of the larger brokerages are actually winning those acquisitions versus the insurers winning the acquisitions. But that said, when it comes to producers and staff, that's where the biggest part of the shift comes. And I think that's where, at least from a producer's perspective, we're starting to see some definite change, because you're moving from what I would call kind of the non-corporate brokerage operation to more of a corporate brokerage operation. And there's quite a few in that sales team that really like where they are because of the structure that they're working under. And that shift to more of a corporate structure and a corporate environment is difficult for some. The contracts get under attack. There's new terms and conditions because of the new owner. And, I've seen a lot of brokerages and talked to a lot of brokers and given some advice in regards to those that are looking at making a shift. And it's interesting. I would have to say that those that I've talked to on the producer side, looking at making a shift, are really seriously thinking about their options a lot harder today than they did 2 or 3 years ago. I think, one of the best I've heard from one is, I'm 51 years old. I don't want to do this again. This is my last move. I got to make sure it's a good one. Right. Yeah. And they're all looking for, not all of them, but most of them are looking for a piece of the pie. Back in the day when I started on as a producer, you basically come in, you were glad to have a job working for a solid brokerage. And you knew that over the next 5 to 10 years, if you built a good book of business and you built a good customer relationship, maybe there was an opportunity to have an equity discussion. Maybe there was an opportunity to get a little bit of ownership. That conversation has changed so much. Producers are now looking at, no, I want to make sure that I've got my future baked in here. I want to know that I have that option baked in. I don't want to be able to, leave myself at risk to have a conversation with the principal broker, the owner of the operation 5 years from now on a chance or an opportunity that might happen. I want to know that if I can perform and I can follow a path that's kind of laid out in front of me, and I can achieve that I've achieved a goal and I can work my way to the next step. The conversation has changed a lot.
And you got into the M&A, how it's reshaping producer career paths, right?
Yep.
And so what I'm thinking is one of the things we discussed a little bit earlier, sort of offline, was this whole idea of producer to owner models. And I wonder if you can sort of explain what that is and why these models are, I guess, gaining traction in your opinion.
Yeah, I guess they're gaining traction because the producer who puts in 5, 6, 8 years. Let's use that person that I talked about that I had a conversation with, 51 years old. Let's say he wants to retire when he's 65. So I think my math's right, gives us another 14 years, right? Mm-hmm. So, he wants to make sure that he has something more than a gold watch and a handshake 10 years from now. He wants to make sure that he has a guarantee built in that as long as he meets the following criteria, that conversation's not a conversation, it's a guarantee. So, and you've got a number of brokerages out there and across Canada. I focus more on Ontario, so I'm more familiar with what's happening in the province. But you've got a number of brokerages that are offering that type of agreement or contract to brokers who fit a certain mold. The ones that I've seen come with either a commitment in regards to a term, a commitment in regards to a gross written premium amount. Some of them come on specialty market and specialty or product specialization. So, and when you get one or two or maybe even half a dozen that are offering that type of arrangement, the mindset of the producer starts to change. And as you know, it's a small industry and word travels fast, right? So,
and if we sort of unpack that a little bit too, in terms of the economics, right? What do you see as sort of the economics benefits from, going independent versus joining a structured ownership model?
So if I come in on an ownership model, a certain percentage of the commission base I'm going to keep, the certain percentage of commission base I'm going to pay back to the brokerage that I'm working with, right? If I was to go independent, the cost of ownership would be a lot higher in regards to me doing it on my own, because I've now got a shared cost arrangement because I'm in an ownership position with a partner versus an independent position where I'm paying for all the freight. right? So I'd have to pay for my errors and omissions 100%, my systems 100%, my staff 100%, my accounting, my bookkeepers, my CFO, all that stuff would be. So the difference, I would say on average, you're looking at a difference of anywhere between 18 to 24, 26%, depending on the operation. And that's a lot of money coming out of my pocket, right? So the model I'm most familiar with is that the producer would own a good percentage, the larger percentage of the book. The brokerage would own the lesser percentage. But there are what I'll call management fees that are paid on a month-to-month basis to kind of offset some of that cost, which makes sense to me. The bigger challenge there for a producer, so let's say that you've got a producer who's very well seasoned. Let's say he's been working with a brokerage for 8 to 10 years, and he's got a solid relationship with his customers. He also has a contract with that broker, and that contract, if it's written well, is pretty solid around non-solicitation. So for that broker to make a decision to move from A to B, there's a 1-year tail there that's going to be really difficult, because you're moving away from a fixed income because of what you've built, right? Even though you don't own it, you've still built it, into an opportunity where you can have ownership, but you've got 1 year of relationship that you're going to walk away from. And not to say that you're going to get that relationship back after 12 months, but you've got to be very concerned, and you have to be respectful of the covenants that you have in place based on the agreement that you've got with your current employer, right? So it's not as easy as saying, wow, I've got a deal over here where I can actually get ownership and I'm going to pick up and I'm going to leave. I got a family to feed. I've got a roof over my head. I've got a lifestyle that I want to continue to live. And where I have seen a shift over the past 6 to 8 months is brokerages are now working with their lending partners to help bridge that gap to make it easier. So I think what we've seen in regards to the shift to a pure producer to a producer with equity will actually ramp itself up over the next 12 to 24 months as a result of that.
Yep, for sure. And just so I understand, like how is this sort of producer to owner model different than the others, like the employee owned and that sort of thing?
You've got a pure producer model where I'm coming in, I'm getting paid a base commission and a renewal. And that's what I'm getting on a year-to-year basis. Let's say I build my book up to a large book. I'm making really good money as a result of that. But if I decide that I want to leave, I want to retire, I have nothing because I have no ownership or equity in that book, right? That book is still owned by the brokerage I'm working with. I may be able to get to my point in my career where I've made a deal with the broker that I worked with that I may be able to pick up 25% ownership. I may be able to pick up 50% ownership. But the equity models that I've seen out there today, where I step in as an equity partner based on certain conditions, the ownership percentage is, I've seen them where the ownership percentages are as much as 100%. I've seen them where they're 80%. I've seen them where they're 60%. So for a broker to have a large book of business 10, 15 years from now, decide that they're going to pack up and retire, having a 80% ownership on a book of business is a pretty good retirement package at the end of the day. If I had any broker come to me and just ask for advice, you really have to take a look at, I call it, maybe it's not the right way, but I'm just going to tell you the way that I call it. You really got to take a look at the divorce clause, right? Like if things don't go well, where are you? How do you exit? And can you exit smoothly, right? That's a really important part of any contract. I've seen contracts where a producer, as a really good example, had ownership. And they turn around and they're at odds. They're not having a good time with the brokerage that they're working with. The brokerage either wants to part or the producer wants to part. And I've seen a producer pick up and move. I've got ownership. It's baked into my contract, but there's nothing in that contract that says the brokerage has to help you move that book. So now you're out on the street, you've found yourself a new home, but now you're faced with, wow, I've got a lot of work to do over the next 12 months because, yes, I own that book, but I've got no way of transferring that book to this brokerage because that wasn't negotiated. So you really got to take a look at it's easy to enter into an agreement where you're putting yourself into a good financial position, but you've also got to really take a hard look at what does that agreement look like if things don't work out, and what are my exit options, and how easy is it to move?
Yeah, no, that's a good point for sure. And you mentioned earlier the covenant aspect, right? Like non-solicit and that. And I know the courts look at that differently, and they want it to be very specific, right? Like a lot of people are like, oh, you can't do this in the city of Burnaby, the whole city. And it's like, well, no, I live there, right? So you're going to have to do that. But they want it it has to be specific, very specific. And so that I think is interesting too, because there's a lot of cases with that where it's kind of like a broker who owns the book, right? And then if it's not written, those non-solicit agreements aren't written well, then it's thrown out, sort of, right?
Yeah, well, it's thrown out after maybe $150,000 invested in legal fees back and forth, right? But yeah, you are right. You've got to be reasonable in anything. I always look at it this way. At the end of the day, if a brokerage owner and a broker producer don't see eye to eye and they want to part, they still want to have coffee. They still want to sit down and be able to socialize. They want to be able to go to a broker convention and still stop and have a chat and talk to each other, right? So you've got to do everything you possibly can to make sure that it's fair for both parties. A messy divorce isn't good, right? So make it as clean and easy as possible so that everybody can get back to work and back into doing what they want to do on a day-to-day basis and get back on with life.
That wraps up today's episode. We hope you enjoyed the discussion. Thanks for tuning in, and we'll see you next time on What's on Deck.